Well, welcome to today's Fireside Chat with BTCS. I'm your host, John Roy. I cover technology here at Water Tower Research, and today I'm joined by Charles Allen. He's the CEO, and I should mention that the company's, that is BTCS's, safe harbor statements can be found on their website. Also, that this Fireside Chat may not be reproduced or a written transcript distributed without the express written consent of Water Tower Research. Charles, welcome. How you doing?
Good, thank you. How are you doing?
Not too bad at all. So just to kind of get us started, can you just give us an overview of the company and the markets you really are going after?
Sure. So, BTCS, it stands for Blockchain Technology Consensus Solutions. We're the oldest public crypto company in the world. For the last 5 years, we've been focused on being an Ethereum first blockchain infrastructure company. And effectively, that means we have accumulating Ethereum as a byproduct of our operations.
Right, Ethereum is having something of a resurgence here the last, what, 4 months, 5 months?
It's doing extremely well. I'd say over, yeah, the last 4 months, if you look at it in comparison to Bitcoin, which is the highest valued, cryptocurrency by market cap, it's starting to kind of recover. I think around 2021, 2022, Ethereum was at its, all-time highs. It is approaching those all-time highs. But if you, compare that to Bitcoin, which, is up well over, 150 to 200% since that same period, it's really lagged. And I think the market is starting to realize the power of what Ethereum can do in terms of, how it can fundamentally change, world economics. And so there's a lot of institutional capital that's starting to flow in.
Well, let's dig into that a little bit more on why Ethereum and what can it really do in your mind going forward.
Well, I think to kind of, bring this into layman's terms, if you look at the internet, it basically was the digitization and proliferation of information on a global scale. And that's fundamentally changed the world as we know it. You can send an email and it can go from here to Japan instantly. You can have news that flows onto your phone, whether that's watching live feeds or anything. But all the internet until blockchain technology came around was able to do was move information. If you wanted to send a PowerPoint, for example, the recipient would just receive a copy of that PowerPoint. You would still retain the original copy. And so what the internet lacked until blockchain technology was the ability to move assets globally without a trusted third party acting as an intermediary. So you always needed a bank, a stock exchange, StubHub if you're reselling tickets. There was always an intermediary. And what Ethereum allows for is the tokenization of real world assets on a global scale and allows you to move those assets near instantaneously 24/7. And that is a huge jump in it's just a huge, jump in with what's possible in the world, right? If you think about how much the internet changed the world and all it does is move information, built on Ethereum's blockchain, you can actually move assets globally. And I think that's people are finally starting to understand that. If you look at the use cases built on Ethereum, we finally have like the killer app. In the early years of blockchain, people talk, well, what's the killer app? Well, the killer app is stablecoins. And there's more beyond that. That's just the tip of the iceberg. I think that's something people have really started to notice that there is, billions and billions and billions of dollars in tokenized dollars, USDT, that you can move instantaneously around the world. And the US government's actually gotten behind this with the Genius Act, which provides legislative guidance on stablecoins. And it makes sense, right? If we want to have the US dollar be the reserve currency of the world, it needs to be frictionless. For it to be frictionless, you can't rely on, SWIFT and ACHs and, 5-day settlements to send a wire around the world. If you have a stable coin that is built on top of Ethereum, that's the blockchain rails, it's now you can export the dollar, which is why the government is looking at this as something that we need regulation around. So that's just one use case of what Ethereum can do. Think of Ethereum as it's a layer one blockchain, which basically means things can be built on top of it. There can be other layers, and so you can tokenize assets very, very, very quickly and deploy those using Ethereum's blockchain as a security mechanism. And you don't have to do a lot of work to do that. And so, if you compare it to Bitcoin, Like I own Bitcoin. Bitcoin's great, but doesn't do anything. It's digital gold. It moves from one person to another, and that's it. You can't build on top of it. And I think uh, with Ethereum, it's a much harder um, asset to explain. It's not like Bitcoin is just digital gold. Ethereum is it's a you can call it a digital oil, or I think some people are referring to it as. I look at it as the backbone of real world assets and the kind of the next phase of technological innovation in the world.
Yeah, you mentioned a couple of interesting concepts there. One was the US dollar tether, the USDT. Now that's a stable coin that a fair number of people have been pointing at to. They're going to be like, okay, that's the one people are going to focus on. Is that accurate?
Yeah, there tends to be a lot of focus on USDT. USDC is another one, which is a stable coin built on primarily on Ethereum. It's offered by, it was created by Circle, so now they're a multi-billion-dollar public company generating huge revenues, and so that's the tip of the iceberg. I mean, there's so
Right.
many other things that can be built on top of Ethereum's blockchain. NFTs. I think that's kind of that fad's kind of gone away. I mean, I don't get, a monkey smoking a cigar being worth $5 million with, a couple pixels in the image that my daughter could have drawn. But a non-fungible token is just each each unit is different or can be different than another, right? So a fungible token would be the US dollar, a Bitcoin, Ethereum. Non-fungible would be like, well, that's unique. And so what could that be? That could be your car title. I mean, it could be the title to your house. Like, why do you need, if anyone owns a home, why do you need title insurance? Like, you buy a home and you need to go get insurance because the guy you're buying it from may not actually have proper title that says that they own it, that's kept at the county clerk's office. I mean, that's ridiculous. If that title was kept on Ethereum's blockchain, and that would be a non-fungible token, everybody could see a public record of who owned it, and if you moved it, you would know who the new owner is, and you would need the private keys to move it. And that's something that, is going to come. It's going to take a while. I mean, it's a hard market to break because it's very decentralized with respect to, it's not the county clerk's level. It's a county, for most states, it's not the county level of where the record keeping is done. But that's just one example, right? You could digitize tickets. There are all sorts of real world assets that can and will be tokenized because it's more effective. And what I think is most interesting is the average user isn't going to care or even know that this happens, right? Like we don't when we call an Uber, we don't think about, well, what technology allowed, the GPS to work, or what data center did that data flow through, or what happened with a driver. In early 2000, we cared about. At the end of 1999, 2000, everybody was talking about HTTPS, FTP, all the protocols that went into the internet. You kind of had that on more of the crypto side where people are talking about the tech. I think when there's mainstream adoption, the users won't even know. They just got to send, you know, 100, $1 million overseas instantaneously at 2 in the morning on a Sunday where the banks are closed, and the third party was able to do that. So maybe they got to get a business deal done, an M&A transaction done. Um, there's so many use cases for this, but it'll be seamless to them. And I think that's why you see a lot of the larger institutions leaning in, both buying Ethereum and building solutions on top of it, whether that's their own layer twos or other building actually on the layer one. So when that comes to fruition, the end user is never going to know. So we'll be a little bit behind the scenes because BTCS, we provide and run the validator nodes and provide the security behind Ethereum's blockchain, and that's where we generate revenue.
Right. And a lot of the friction, like you just described, is in the system, and these bigger firms are going to want to play because they might be the beneficiary of that friction at this point. They see it going away, they want to participate in the new, which makes total sense. So in terms of BTCS, how do you guys differ from all the other players out there in Ethereum?
So I would look at it in a few ways. So until about a month or two ago, if you wanted exposure to Ethereum that was not on a one-to-one basis via ETF, and this is in the public markets as opposed to just going and buying Ethereum from Coinbase or some other exchange, um, we were the only option in town. And so what makes us unique is when I look at the different ways you can gain exposure to Ethereum. The first is just go buy an ETF, you get one-to-one exposure. That's great, but you're paying fees to hold Ethereum, which you could just go buy on your own. The next level up is there's a lot of these digital asset treasury companies, which we're kind of aligning with, but are very different. So a digital asset treasury company is one that's just going to go buy Ethereum, put it on their balance sheet, buy more and more, and maybe they'll lever up with some debt, and they'll stake the Ethereum. So basically, you've got right now most of them, I don't even think they're levered, are just Ethereum one-to-one, like an ETF plus staking, so you get a three and change yield on the Ethereum because they've staked it to via a third party. So then you move to the next level up, which is kind of where we fall. So we are, the ETF exposure plus the staking without fees because we run actually our own validator nodes and we're very sophisticated on that side because we've been doing it 5 years, not 2 months. And then we do a lot of other things. So we have our hallmark DeFi, TradFi flywheel, which is basically we look at one, how do we raise capital and deploy that to grow kind of our ETH balance sheet and drive revenue? And those are the two things, like driving revenue, EBITDA, traditional equity market metrics, as well as growing the ETH balance sheet. And so, the first is strategic capital raises. And what I mean by that is like we're using three different approaches. One, we have an at the market, an ATM facility where we can sell shares directly into the market, which is pretty much the lowest cost of capital you can get in straight equity sales. It's a 2 to 3% commission, straight common stock, no bells and whistles. The other thing we've been doing, and this is at a smaller scale, is we've done a couple above market convertible note deals. So the most recent one we did, it was a smaller deal, it was $10 million, but it was at a $13 conversion price for the note and I think an $8 strike price for the warrants that we issued. And the warrants are cash only if registered, and we just filed the registration statement. So it compared to the ATM, it's about 42% less dilution than selling shares on the ATM. Obviously, it's debt. We either have to repay it or it'll get converted out. We're optimistic it'll get converted out because it's a 2-year piece of paper. The third, and this is the most interesting, this is why we call it the kind of DeFi, TradFi flywheel, is we're like the ETH we're buying with the funds from the common stock sales via the ATM or the convertible note. We're taking that Ethereum and we're depositing it into Aave. It's a decentralized lending and borrowing platform built on top of Ethereum's blockchain. And it basically eliminates what a bank does. You get rid of all the brick and mortar, you get rid of all the people, and you do what a bank does, right? Just like when you go to a bank and you borrow money against your house, you take out a home equity line. There's all this paperwork, there's all this process, there's valuations, it's gonna take months, and the interest rate isn't, what you pay is pretty high. And so what Aave does, it eliminates all of that. You post collateral as a cryptocurrency. So we're posting Ethereum and we are borrowing USDT, so basically borrowing dollars. And the great part is we earn interest on our collateral that we post. So the Ethereum that we're posting in collateral, I'll just throw out easy numbers here. If we put up $100 million as collateral, and I think we have like 125, but we'll use 100 for easy math, we earn 3%, anywhere from 2 to 3% APY. We've seen it go as high as 14% when there's kind of dislocations in the market. But let's just say we went with 3%. We're earning $3 million a year on that 100 million. We've borrowed 35 million, and let's say we're paying about just under 5%, about 4.6 to 4.7%. So that's about $1.6 million that we are paying in interest, and it's perpetual debt. So we never have to, we can't get our collateral back until we repay the principal and interest, but it doesn't have a maturity date. So it can stay out there as long as we want. So it's not like if Ethereum keeps doing well, and our loan to value stays with healthy, we don't have any issues. And so if you look at that, we are net about 1.4 million a year, right, of what we're actually earning. But then you take into account what we've borrowed, that 35 million in this example that we borrowed. We're going to go stake that and earn yield through our blockchain infrastructure operation. So now we're earning additional Ethereum on that, and we're vertically integrated on the operational side. So this is kind of this DeFi TradFi fly, our DeFi TradFi hallmark flywheel is we are actually earning yield by putting our money to work. We're providing investors exposure, at least in this example, of like 30% more exposure to Ethereum by taking on leverage that is, in our opinion, very safe because we've got a healthy loan to value ratio and we have access to the public capital markets. And so I think that, going back to your point of what sets us apart, our capital raising strategies are definitely much more sophisticated than others and allow us to generate more yield and provide more exposure between the ATM, the above market converts, and using Aave in DeFi. So that is very unique. And that allows us to basically accumulate more Ethereum. I think the next thing that really sets us apart, and this is something that we tended to focus on historically, is like the key focus was the operation. So we've been doing this 5 years. We've been running validator nodes. We don't go to a third party and give them our crypto and then pay them a fee to stake it and earn yield. We run our own nodes. We run nodes, solo nodes. We run nodes for Rocket Pool, which has a higher yield. And then we're a block builder. And the block building gets pretty complex, so I'll kind of keep it simple. But block building is basically constructing the blocks of transactions that get written to Ethereum's blockchain. And that has been a huge driver of revenue for us. And obviously, as a public company, driving revenue is one of the key metrics. And we've seen right now block building is about 80% of our revenue. We've seen 200%, quarter over quarter revenue growth. Just, in terms of metrics, I think in 2023, we did 1.4 million in revenue. 2024, we did 4 million in revenue, and 2 million of that was in the fourth quarter. We did about 1.7 million in revenue in Q1 this year. Obviously, Q2 isn't out yet, but we've disclosed that we're going to have record revenue. So that's going to be above the 2.3 million we did in Q4. And I think 2 million of that was block building. The other was the node ops. And so we put out guidance, and this is before we raised hundreds, I think like close to $200 million. We've raised $207 million year to date, most of it in the last 2 months. So all of these numbers are based on these recent fundings, which should drive further growth. But prior to that, we put out guidance at the beginning of the year that management, it wasn't really guidance, it was more management targets, what our compensation is going to be tied to. Because 100% of management compensation is tied to performance. It's all performance based. There's no discretionary bonuses. And we have a target of 8 million in revenue for 2025 with a stretch goal of 20 million. That's going from, 4, doubling it with, going to 20 is a huge jump. And so, our internal goal is we want to hit the 20. Whether we get there or not, obviously I can't, provide any assurances or guarantees. But with the recent fundraising and our operations, it's we're on a very good track to have strong Ethereum accumulation coupled with strong revenue growth, and that's kind of what I think differentiates us from the other players. If you want one-to-one, go buy an ETF. You want an ETF plus staking, there's a bunch of options out there. If you want an ETF plus staking plus block building plus that's us.
Nice. Well, it's quite the tower of revenue. Let's just call it that for a second. The different stories that build up. So what is next for BTCS? I mean, more of the same for a little while. Get your a little more funding in. What's the big deal here?
Well, I mean, obviously there's certain things I can't disclose on this
Right.
call. I think what we're putting out publicly is we're looking to continue to grow revenue. On the block building side, it's really three kind of core things that are going to drive additional revenue. One is controlling block space. It's pretty technical. I won't get into how we're doing that, but it's primarily through some partnerships. We've partnered with Figment, and we've signed up WonderFi, which is now Robinhood, as one of the customers. So that's in the works. So that's kind of controlling block space, which is primarily either biz dev or having more assets to stake and controlling the validators, which the new funding should help. The next piece is improving our tech stack And so we've hired additional developers, and we're building there. And then the next is kind of getting order flow, and that's biz dev. So those are the three things that are going to kind of drive revenue and accelerate growth over the near term. We have a lot of other initiatives we're working on, which I can't disclose at this time, but really, acquiring more Ethereum and driving revenue through our, vertically integrated Node Ops and Builder Plus platform in connection with our hallmark, DeFi, TradFi flywheel is kind of the name of the game.
So one final question. I know you had mentioned the Genius Act. Do you think there's more legislation that we A, need and B, might see in the US?
I think, though, I know there's a couple other bills. I'd have to look up exactly where they are in the process, but to me, this is the best part. Like, we've seen a really nice increase in the price of Ethereum, but price aside, we're now seeing institutions, large institutions like BlackRock and Fidelity, um, be able to engage in and interact with blockchain technology in a way that didn't happen under the prior administration. So it's just the beginning. We have the first legislation through. More legislation will come, which means more institutional capital will flow in, will both, drive the price of the cryptocurrencies as well as the innovation that's really going to make it truly valuable in the long run. And so I look at where we are today as, the last 10 years. I mean, I think today's Ethereum's 10-year anniversary. We are literally, that was like the starting point, right? Where we're moving from developers and proof of concept to, mainstream adoption, and we're just starting that now. So it's a really good inflection point for those new to both blockchain technology, Ethereum, cryptocurrency, to have a strong look at this. And the government's behind it. They want to export the dollar. They want, the new administration wants the U.S. to be a hub for innovation. And so I think it's still it's very early days.
Well, great. Well, I'd also heard that, a lot of people pointing out that a lot of the votes on the bill were bipartisan, which is, rare these days. And it does
It
show that
is.
there is this makes a lot of sense. Well, I think we're going to have to leave it there, Charles. I really appreciate you joining me today with this fireside chat. Thank you so much.
Yeah,
And
John, thanks so much for having me.
hey, no problem. And to learn more about BTCS, please visit their website or access our research at WTR's website at www.watertowerresearch.com. I want to thank everyone for joining us today. The views expressed in this fireside chat may not necessarily reflect the views of Water Tower Research LLC and are provided for informational purposes only. This fireside chat may not be distributed or reproduced without the written consent of Water Tower Research and should not be considered research nor recommendation. WTR is an investor relations firm, not a licensed broker, broker-dealer, market maker, investment banker, underwriter, or investment advisor. Additional disclaimers can be found at watertowerresearch.com.